Losing $226 over trading on a Thursday. What's going on, guys? Welcome on in. I have three technically different tickers to dive into, or I guess assets, if you want to call them assets, that we're going to talk about. And this is going to be more about, well, we'll review the trades, don't get me wrong. There's two of them we're actually going to review, and then they're actually the same trades, essentially, just on different things. And then we'll talk about the mindset. So, well, I guess I should start there because starting off, we have an S&P 500 down 51.70, and then we have an S&P 500. If I click on next trade, down 134.25. So starting off, the bulk of the losses were in the S&P because this was traded on a larger size account. Simply put, it's actually not that bad in terms of a risk on the account because the account's like 25K, 26K. So not that much on the account, but this was kind of like the first time I'll say that I had a situation like this in a while. Now, did I lose? Did I lose? Did I move my stops? No, I respected my risk management, saw the trade setups, took the trades like I would normally take them. The problem is that I was kind of hunting and forcing stuff. And so on this specific day, we kind of had like price action choppy, then it dropped, and then it came back. So it wasn't super clean in terms of momentum, which is generally what I look for in my strategy. And so what I thought as the day progressed, because I had two examples. If you go back to yesterday's trade recap, I had an Amazon and I had an AMD breakout that just didn't work. Even you go back the day before, there was a Dow breakout that just didn't work. So prior to this, let's frame this. Prior to these next three trades, we had. And again, you can see that the first two, we lost 50 something and then 134. And then the next two, we lost whatever, like another, like less than $100 total after this. So 226 was the total. So it wasn't like I blew anything up. It's just needed to mentally take a step back, as I'm now doing in the recap, which is what these are literally meant for, and why I started to do this. And it's as if I'm just talking to myself. It's kind of, that's literally how it feels, honestly. So I'm just going to, we got to this point. The breakouts hadn't worked, and I was thinking, well, let's try the false breakdowns. The market starts going down. Let's see if we can get a false break. And I was essentially forcing it. I wasn't letting it come to me. I was forcing it. I was running through the forest, like hunting this shit down when I didn't need to. I could have just waited. And these either wouldn't have set up, and I would have saved $226, or maybe they would have, and I would have got a better entry. I would have had a better, trade somewhere else. There actually was a Dow trade that I just missed. That would have been great. It would have been awesome. But I was too busy running through the freaking woods trying to figure out or trying to chase shit down when the Dow trade just fell into my lap later on. And I didn't take it. But that's the story of how this stuff kind of goes. So I will go into these trades, and then they're on the 5. I'll do them right here because it's easy enough to look at them like this. If I bring this down, can I bring this down? Maybe I can't. Either way, these are both on the 5-minute time frame, and I'll jump back to when this occurred. This was around 11:50 Eastern time. This is in Central time, so 11:50 Eastern time on the S&P. The reason why there's two on the S&P is this was taken on a two accounts. One was on the smaller one, and one's on the bigger one. So let's dive. By the way, that looks good there. That could be a future trade recap in the works. So, I mean, we're kind of getting a look of it right now, and that hourly chart we just looked at for a second looks interesting. But the idea here was actually taken up here. And I saw we had a big breakdown later on, but what you could have drawn, I could draw a line right in there and say, oh shit, it was really good. But we had was a little breakdown under here, and then it just undercut the low of the day. And then on this candle, this wick right here, this green one, this guy right here, on that candle, as we're up here, I'm like, oh shoot, like, yo, we're false breakdown here. We undercut lows, had volume, came back, tried to recover some, not amazing volume, but better volume than what was happening prior. And here we come, like we're bouncing right back and we're regaining the areas that we had broken down. I just didn't give it much time. I kind of just jumped in right away. Because like I was saying, I was running, I was hunting, I was looking for something when I didn't need to. I was forcing stuff. And I normally play breakouts. This is the kind of added piece to my strategy that I I pull out of my arsenal from time to time when I feel like it makes sense, given the current situation. This one didn't. It kind of made some sense, I guess, but didn't need to take it. So it's essentially when the breakdown occurs in a bigger picture uptrend, which if you just zoom out on the S&P and look back the past couple of weeks, yeah, it's clearly a bigger picture uptrend. So you have a better bet of like buying the dip in this manner, whereas like you're not just randomly buying the dip, you're waiting for it to break down and then quickly snap back, regain the breakdown level, then get in. That's kind of my strategy behind it. And it just happened to be early. Is it like it wasn't like terrible. I mean, I saw like technically speaking, at the time it looked okay. So I get it, but we didn't really regain. I could have waited for us to regain this volume node here. I could have waited a little bit longer. I was trying to get a really good entry was kind of the idea. So that occurs and I'm like, fuck, like, you know, here we go. Then I jump over. I'm like, okay, well, I'm not satisfied. Mind you, we are exception. This is a trade that it's open. Don't worry about that one. I'll have a recap on Netflix whenever I close it. Mind you, at this point, I'm like this close to hitting the funded threshold on one of my accounts. So I'm like, I'm kind of in that, like, let's just get it fucking done today. Let's fucking go. That's literally what and it's not good. It's not good. I'll be real. I mean, it is not good. And I now have a much better laid back approach behind it. But, you know, as I've taken an hour or 2 or 3, whatever it is, to just like, relax, dude. You'll get there eventually. Just do your same strategy. Simple as that. But then I look and I'm, okay, MU, let's freaking go. MU. Why MU? First time I've traded Micron, and I don't think ever maybe, but because I was looking at it on the daily time frame, I'm like, oh shit, dude, Micron been super strong. If it fills the gap back the downside, maybe there's a potential false breakdown set up there for a bounce. And it's bouncing now, but I was literally looking for a false breakdown in these tiny ass candles. I mean, come on. Looking back, this is a bad one. This is a bad one. I'm going to log this one as a mistake. This is one that should not have been taken because there was like almost no way I could have possibly decided this was a false breakdown. It was me like grasping at I was trying to find one. You know, I was hunting one down that wasn't there. I was seeing shit in the woods that wasn't actually there because we did have this little candle. Here's what I saw. Little candle right there. Oh, undercut the lows. Oh, bounce back. And then I saw this candle before the wick was established, when it was up the top of the range. I'm like, oh shit, get in. Then I got in, put a stop loss under low of day. That shortly hits 10 minutes later, and we drilled the lows. Ultimately, though, this actually could have been a really good breakdown trade. I don't trade this way because it was very, very strong. So I would need it to be had been weaker the days leading up to this to play this, but good breakdown trade either way afterwards. So again, lost 58, not a huge deal. Okay, whatever. And if you do the math, you're like, well, how did, you actually had a win. I did have a win on NVIDIA. This is where we get a little more wonky. This trade was this is when I stopped. I literally stopped. I shut it down and I left because I got lucky, but also, wouldn't have lost that much money on the trade. It would have been, whatever standard loss on the sizes on the account. However, I was pulling up NVIDIA, and I don't normally do this. And I had just entered some data in, just numbers in, stop, take profit, just to see, what would the risk reward be like? Okay, whatever. And then I did not click my mouse, but I must have clicked my keyboard by accident. And this is not an excuse to say, I made money on the trade, technically. I hit enter by accident, didn't realize that I had the order entry still pulled up, and all that I did was then enter it, and it got me in. I was actually jumping back. I was trying to jump back over to Apple because I was looking at Apple at the time. And I was like, Apple could be a candidate for a false breakdown here. And Apple might. It's kind of, I forget when this exactly was, but if it was somewhere in here, maybe there was something to be had because it is recovering. But either way, I then recognized that and was like, yo, this is on NVIDIA. Shit. Not what I was trying to do because at the time, super risky because not that I'd trade this way, and obviously it was a mistake, so it is what it is. At the time, dude, NVIDIA was in free fall. I happened to get in somewhere in here, and NVIDIA bounced back up, so I ended up, before it came down, I recognized it. I was like, oh shit, get out. It was in free fall. I don't do that. I don't buy a random dips like that. I do not do that shit. That's not me. It's not my strategy. So in the moment, I kind of was, again, mentally, just a mess. Like this, I should have left earlier. Luckily, this is what happened, and I was able to not have additionally another loss. But that's what ended up happening. So all in all, lost 226, whatever the number was, not good. A lot of shit kind of went down all within like an hour span. But this is exactly in my opinion, the way that you can blow up a prop firm or be an account I have not done this in a long ass time, but I think from time to time, I don't want to say it's good to do it like on purpose, but it's good to almost have it happen or even have little spurts of it happen while you manage risk. And in my situation, like risk management is like number one for me. So I'll never allow myself to get absolutely annihilated on a given day. I might have a decent sized loss that I'm like not happy with, but it will never put me in jeopardy of blowing up an account essentially in one day. Can't happen, won't happen. It's just not me. It's not my identity. I don't identify as a person who does that anymore. But we kind of flash back to like a year or two ago when I would do this all the time. And you kind of remember those days now, like as you recover or as you recap the trades, you're like, holy shit, there's a reason why, right? There's a reason why I operate the way I operate the past 15 months. And I don't do this. And this happened maybe a couple of times over the past 15 months, but not very often. Prior to that, it was many, many more times. But there's a reason why you don't let yourself spiral and that you put stops in place. And not only do I mean actual physical stop losses, but I mean like you have to remove yourself from the shit sometimes. And I think what got to me was that I was just this close to the funded threshold. And we're still like, maybe not this close, but like this close to the threshold. It'll happen when it happens. Let the trades play out. But I think that did get to my head on some of these trades that I did not need to take. The ones from, if you go back to yesterday's recap, those were really, I thought those were good setups. I mean, I would take those trades again. They just didn't work. So seeing that those didn't work, I quickly, I transitioned in my head saying, well, let's play the opposite of that. So let's look for the inverse of my strategy. And then I was forcing stuff that did not need to be forced, essentially. Not that these are necessarily bad, terrible trades. The ideas weren't bad. The S&P idea, there was some validity there. The MU one, okay. At the time, it maybe looked a little, but I was going off of like 2 candles, so there's not enough data. So, nothing terrible in terms of massive losses, but, that's currently the state of the account or the state of where we are. And we'll have more trade recaps as they drop or as we exit positions. Currently, I've got an open position on Bitcoin, Netflix, eBay. Those have been swings for some time now. And I just opened a new one, 2 new ones, 2 swings. So there's a lot going on, I guess. But they're bigger picture swings on the daily, and ones on the 1 hour. It could be a trade that ends up closing out soon, but we'll see. We'll see. So there you have it. That's the recap for today. Hopefully this was helpful because, well, yes, it is kind of like a pain in the ass. At the same time, like it could have been a lot worse. And in the past, these situations were a lot worse. So what I'm going to do now is I'm going to just go into TradeZella. I'm going to tag everything. I'm going to put the mistakes I made down so we can keep track of those things. So I have that data so in the future, I don't make these same mistakes again, or they're going to pop up. And I think this is kind of how it has to be honest with you. It never goes away. Like these mistakes never necessarily go away, but I do think that you can minimize them. And I think I've done a decent job of minimizing them. And so now hopefully that's out of the system and we don't have this happen again for many months. We'll see. Thanks so much for watching. I'll leave TradeZella link down below like always to track everything, and I'll see you in the next one. Peace.